Welcome to IFA TV. I'm Tom Cock. Joining me is Mark Hebner, and we want to talk today about price. When it comes to the price of securities, what should you believe? Should you believe the experts that tell you here's what the price should be, or should you believe the collective wisdom of all of us to determine what the price really is? Well, we've got a bunch of examples to talk about, Mark. We've got books, we've got jelly beans, we've got cakes, we've got kind of everything to try to drive this point home, which is so incredibly important for people because we want you to be an educated investor, not a speculative investor.
Exactly. Speculation has had some bad outcomes. You could end up with the speculation blues.
Exactly. Oh, let's not break into that.
At all costs, we
long
want to avoid
afternoon.
So one way to avoid the speculation blues is to accept that all of these traders, some 10 million traders every day, 5 million buyers, 5 million sellers roughly, just as an estimate, actually do a good job at setting the price, as opposed to certain gurus that come on CNBC and Fox and whatever telling us that this is what the price should be. This stock's overvalued, this market in China is undervalued, blah, blah, blah. And that's really the question that we want to address today. And so to do that, there's been a number of tests done, little experiments, about the wisdom of the crowd, okay? We're going to talk about the history of the wisdom of the crowd and address these books a little bit later, but let's talk about a little experiment we actually did.
I love this.
We did here at IFA.
I'm gonna wreck the experiment
You're
by having one of these jelly beans.
Don't eat one. So what we did is we took this jar of jelly beans, and a couple of our staff here actually went through and counted every jelly bean in that jar.
It turns out that we'll show you the answer, but apparently we do have a lot of bean counters here. We'll get to that in a minute. Sorry.
And then we walked around to all the IFA employees and collected 106, including some posts on Facebook, and even some people here in the building that were located at IFA. We came right up to them. Can you guess the number of
how many beans?
And we offered them a little incentive. We offered them a Starbucks card. They can get a couple cups of coffee, whatever that might be. But that's not quite as much incentive as a buyer and seller has in the market, because they're trading, right?
They're thinking they're going to get rich because I made this trade.
One's getting out of the way. And so actually, at the same moment, as Louis Bachier said in 1900, one side of the trade thinks it's going up, the other thinks it's going down at the same moment. And through these equal and opposite opinions, they end up coming to what he said was a fair price.
Here's interesting. Somebody said 200 and somebody said 5,000. So 200 seems quite low.
Yeah.
But at the same time, 5,000 seems pretty high.
So we had pretty good range, but really only 100 actual participants.
Sample.
Very small sample compared to the 10 million traders in the markets daily, really. And so, think about in a week and in a month and in a year, how many participants are contributing their information, their knowledge into a price. So we actually had one IFA employee who was within 5 beans of the actual total. And so we did have somebody that did a pretty good guess there.
Won some coffee beans for a good pick with these beans.
That's right. That's right. They're going to swap of the beans here.
There we go. All right, so here are our numbers.
Here's the results. Drum roll, please. Well, it turns out the participants' average was 1,086 jelly beans. And how many do we have in there, Tom?
There it is, 1,157. That's pretty doggone close when you look at this.
Yeah.
Pretty well done.
As it turns out, that crowd was a pretty good guess, pretty good estimator of how many jelly beans are actually in this thing. It's kind of tricky to calculate all that if you were to try to measure and do a full calculation, though. And it turns out that the wisdom of the crowd was actually within 6% of the actual amount of beans in that jar.
Yep.
So I'm pretty pleased with that.
Very good. Very good.
Even though we ended up with a relatively small sample, we ended up with a pretty good result.
So now we want to try to take that and equate that to the price of securities, because people oftentimes are more interested in the price of stocks than they are with the number of beans in a jar, correct?
Exactly correct.
Hopefully.
Yeah.
And that's why we're here to help you figure all that out.
Yeah, and so the way to kind of summarize our discussion is that we think there's wisdom in the markets, and that wisdom exceeds that of any individual expert or stock market guru who you're hearing about somewhere in an article or on television, who likes to claim that some price is not fair.
They
in
can see the
essence.
future. They know something about a company, whatever it is.
Their crystal ball's really clear, right? Every
It's a
time we
good
look
day.
at our crystal ball, it's always cloudy. I
future's
don't quite get
unclear,
it.
yeah.
So this is why we have this painting about the wisdom scale. Here we have the crowd. Here we have an individual. The wisdom really appears to be in the favor of the crowd, not the one individual. So when we look at now the markets, you can think of them as sort of a collective brain with a lot of, let's say these are the sellers, these are the buyers. They're analyzing all this news and the old ticker tape and computers and blah, blah, blah.
That's right.
Put it all together with all these stock exchanges, and you have really a lot of collective information and knowledge.
And
right?
it's 60 million trades, $300 billion. I mean, there's a lot of money that's trading hands here, and a lot of various opinions between the 5,000 and the 200, right? I mean,
I just want to repeat that. 60 million trades every day. You have about $300 billion worth of trades, and then we estimate about 10 billion shares trade every day.
It's a lot of activity.
A lot of activity. So you might say that the price is something we should celebrate. So you might hear on TV that the information about the future, about interest rates, is baked into the cake.
Yeah.
We'd say it's baked
there.
into the price cake. And I've always wanted to have a price cake here.
Apparently you
and
won.
We finally won. We've got a price cake here. And now we can actually celebrate the wisdom of the crowd. So maybe you ought to
I'll do
light
that.
those
Why don't you tell us a little bit about the history of all this?
A little bit of a history of where this comes from. Well, 2004, James Surowiecki here wrote the book called The Wisdom of Crowds, but actually that title was a play off of this book from 1869, The Memoirs of Extraordinary Popular Delusions and the Madness of Crowds. Now you might think of the madness as that individual who thinks they're an expert.
They're crazy.
Turns out they weren't the expert. And then this book from 1869.
That goes back to the 18th century. I mean, that's a long time ago.
This is 1720.
18th century,
yeah,
right?
and
And
just
then,
so this book was actually written about the madness that occurred back in 1720. Here you can see this image, which is the same image of this book, called The Great Mirror of Folly. The folly really being that someone would think they know when prices are wrong, and they would want to continuously speculate and sort of gamble in the market of fair prices.
Well, and we'd prefer to see you be educated rather than trying to be speculative.
Absolutely right.
At the end of the day. So I'm going to go ahead and dive into this.
Yeah, we should
you
dive
can take
into
the
that.
beans. And
Yeah,
I'll
look
take
at
the
this.
Cake.
I love
mean,
this.
This is great. Everything's right there, baked in.
Celebrating
It's perfect.
the market.
And so
Baked in
don't
the
be
cake.
a speculator. The price is baked in there. Thank you for joining us here on IFA TV.
All right.